Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel, and today we have an amazing guest, an up-and-comer in the mobile home park space, in Mr. Charlie Ansanelli. Before we dive in, I want to ask you a real quick favor. Would you mind taking an extra 30 seconds and heading over to iTunes to rate this podcast with 5 stars? This helps us get more listeners, and it means the absolute world to me. So thanks for making my day with that review of the show. All right, let's dive in. Charlie is the principal of RockStack Capital. He is a former tech entrepreneur turned full-time mobile home park investor operator. He owns and operates 11 mobile home parks comprising of over 600 units and over $20 million in current market value. In addition to mobile home park investing, Charlie is also an angel investor and enjoys mentoring other entrepreneurs or people new to the real estate investing space. Charlie, welcome to the show.
Well, Andrew, thanks for having me. That's a very kind introduction. You know, it's almost like I could have written it myself and sent it to you before the podcast. So thank you for reading that. I do appreciate it.
Don't mention it. Charlie, what can you tell us about your story and how you got into manufactured housing? I mean, all the way from tech entrepreneur to trailer park king. Give us the dirty details, would you?
Yeah, sure. So I'm born and raised San Francisco Bay Area. So I think tech was sort of, indoctrinated into me at a very young age. I had early aspirations of, being the cover of Fast Company magazine and Forbes. And here I am, sort of this mini mobile home park mogul. So my life took a little bit different direction than I expected it to maybe 10 years ago. But I'm just, I couldn't be any more elated the direction that it took and the work that I'm doing. It's really, I feel like what I was always meant to be doing. So I'm super happy the way things turned out. But yeah, always been entrepreneurial. Started my career really by dropping out of college to join a fast growing sort of tech travel startup. Learned a ton there, really got not just my degree, but my MBA there. Got to sort of be a part of a team from 5 people to 50 people and sort of go through rounds of raising funds and seeing the growing pains of a company and how you go from, in a lot of ways, there's a lot of parallels too, of like when you go from like 1 and 2 parks to like, 5 to 10 to 15, right? I mean, that's something, I'd love to talk to you later on in this podcast about too. But yeah, so I got to sort of go through that experience. And then once that sort of felt like it was no longer an education for me, it started to feel like it was a job all of a sudden. I realized, okay, I need to quit. So I did. And I started 2 sort of online businesses myself. One really took off with the media. That was Park Please. That was like an Airbnb for parking spaces. We had a lot of fun with that, raised some capital around that. People thought that made me rich. It didn't. It just put me in the media, which was fun at the time, being in my young 20s. But ended up being able to exit and sell that, pay back my investors, get a good story, learn a lot. I was certainly not well equipped at the time to run a business. I was able to start one, but not run and grow one yet. A lot to learn. Started another one, more like a side project, sold that as well. And then I had a third business going in the background this whole time that I was running and then was continued to run. And that took off too. And that was making me good income. It wasn't making me wealthy. It wasn't making me a millionaire, but it was making me good income. And somewhere in that story, I had met my wife. Of course, I think she thought I was doing well, but I was broke. This, I remember when I took her on my first date, I was hoping the credit card wouldn't bounce, but I think she knew I didn't have much money. And so anyway, I ended up that third business though, I was doing well and started to make some good money. We ended up having my first daughter We were living sort of in pretty modestly. And I just wanted to diversify my income. So I had saved up a nest egg of around $120,000 plus or minus. And in a lot of places in the world, that's a lot of money, but not in the Bay Area. It's really not much. And so a lot of people thought maybe I should buy a single family home. It's the responsible thing to do. I'm a young man starting a family, but instead I bought a 31 pad mobile home park in Tucson, Arizona. And, just like dropping out of college, people thought I was crazy again. And it turned out to be probably, aside from meeting my wife and having my daughter and son, the single best decision I've ever made in my life. It cash flowed very well. I sort of implemented, the standard plan that's out there to kind of, value add these things. And then in a year and a half, I was able to more than double the price I bought it for. So, it was like an 800% return on my capital for my down payment. Sold it. In between that time, I had bought a second park in Pittsburgh, a very small one, about 25 pads or so. And that was doing very well. So then I basically sort of took the proceeds from the Tucson park, bought my first big institutional size community in Indiana. Decided I just wasn't really loving the deals I saw in Arizona as much anymore. I was looking for higher yield. I heard that the tenants up in the Midwest section were good tenants, and I can attest that's true. Typically, it's a nice tenant base in the north, and the park in Pittsburgh was doing very well. So then for a while I was kind of juggling these two things. I was juggling, running this one business, which really was my main focus, and then sort of on the side I was, running these properties that were my own, and sometimes I would have friends and family co-invest in a deal with me. But one really started to outpace the other, and my interest in one really started to outpace the other, and that was in real estate. I've always had a passion for real estate. And so then, looking back, thank goodness I did choose to diversify my income and not be dependent on just one channel, because COVID came and that just took everything by surprise. And that other business had to shut down. It's not even, we're rebooting it. I won't be the active operator on that business anymore, but otherwise, it would have been, Andrew, I would have had a scary time, like trying to feed and survive and feed my family if I didn't diversify my income. And so anyways, I just doubled down on mobile home parks. And, by this point, I sort of had a process. I had the right technology in place and, figured I could learn the rest. I had a lot of people sort of at this point, wanting to invest in my deals. And I just wasn't really, I didn't know if that was a path I wanted to jump in fully, because that's a big responsibility, as you're aware of, right? When you take on investor capital, and I've been down that road before with startups, and it can be a lot of pressure. But once I felt very confident, in sort of the space and my experience in it to execute, I said, okay, let's do it. And, found some really good deals and sort of doubled down. And I think over the last, year and a half, probably tripled my portfolio size. And it was a good time. I'm not sure about how it was for you, but COVID was a great time to buy this last year.
It really was. I think back in March and April, we did the same thing. We kind of I guess we didn't do the same thing. We kind of paused a little bit, and we saw some other operators that were just still very bullish. And we were like, wow, they're still going for it. And then we waited a couple months, and we were like, okay, the collections weren't as bad as we were expecting. Let's get back in the game here. So
right. Wow, and I had a couple contracts that were sort of they were in contract during COVID, but I didn't want to cancel them. So I just found a way, hey, let's extend the contract 60, 90 days. We'll see how it goes. Mm-hmm. So some were very willing to do that, but
which is smart, because we had a deal under contract, and the financing changed. The whole financing option changed. We were looking at agency debt, and then they required 18 months of, reserves at closing. And, it just changes the amount of capital you need to close the deal and everything. So yeah, that's nice that your sellers were willing to extend.
Some were very cooperative, and I'm appreciative of that. But and I'm sure, like you and like everybody else in the space, or anybody else who was just alive doing anything during that first, 2 months of 3 months of COVID, when it hit from between March, April, May, very scary time. But and of course, I was like, I just built I put all my eggs in this basket. I just built this thing. It's my little empire here. And I was so afraid, what was going to happen. But I think the way I calmed down was I said, okay, like I am sort of at the backstop of the economy. I mean, I'm in the affordable housing space, and if my tenants can't pay their rent, then I know no one else in this country is going to be able to pay their rent, and the government's not going to let that happen, right? So I mean, I felt pretty confident that I knew I could at least service the debt. And of course, our tenants also have skin in the game, right? I mean, they do want to keep their equity in their homes, and they don't want to lose that. We were proactive in reaching out to all of our tenants and making sure we said, hey, if you're having trouble, and you got to prove it, but if you're having trouble, like, we're here to help you. We're going to figure this out together. Don't go radio silent on us. That's the worst thing that can happen. No, yeah, I think that kind of, I knew the government had to step in. I knew they did. And I also felt confident that, I mean, given our rents in the market, most of our tenants were going to be able to pay their bills, and they were.
Yeah. We had a similar, COVID experience, but now it's a weird kind of, I don't know, backside of this, because now it's like, hey, people are still making more on unemployment than they were at their day job. So it's, the incentives aren't matching up appropriately. But that's a whole nother conversation.
Right.
But let me go back to this Tucson deal, this 31 lot park. What even got you interested in this deal, in mobile home parks in general? Was this just like, hey, this looks like a good investment, or did you like research the asset class and say, hey, this is what I want to do?
Yeah, I love this question. It's also always a question I ask my sellers too, because I always want to find out, hey, how did you get involved in mobile home parks? It's just a fun sort of mystery to unveil. Yeah, and if I recall, for you, I think it was because you were doing the mobile home flipping, right? And then you kind of said, hey, well, I should just get the park.
Yeah, Lonnie deals. That's exactly
right. And so for me, and I looked into doing Lonnie deals too, but I was just sort of, I took a moment I knew I wanted to invest in real estate. And so I took a moment to sort of, just study the landscape of real estate, the different asset classes, and sort of unpeeled it. And I was like, okay, maybe do I buy like a duplex? Do I buy a quadplex? Do I buy a small, garden style apartment complex? And then, just through that rabbit hole of just research, I came across mobile home parks on the internet. I don't know how I came across it, some forum. And it was one of those things where I never understood mobile home parks. I would see them from time to time. My grandma lived in one at one point. I think, like a lot of people, I was naive to it. I just thought, why would I want to own a mobile home park? Like, I mean, don't mobile homes like, depreciate in value? They don't typically go up in value. Why would I want to own something like that? But once I really understood sort of, the thesis behind the investment, where it's like, oh no, like the tenants own their homes, and I want to own, the land and essentially be this, glorified, parking lot with, utility structures. It became a lot more attractive. And then also, once I sort of understood, other factors that go into it, right? So I mean, I look at things from like a market demand point of view too. And so, the need for affordable housing is just something I don't see decreasing, in my lifetime or any time. I mean, we seem to have a wider and wider gap year over year, in housing affordability in this country. And so from a market standpoint, I just felt very confident in the product and then in the service. And then of course you look at other factors, right? I mean, they're not building any more of these things. Cities create, all sorts of laws and ordinances to basically discriminate against affordable housing, and we can go on about that, why they do that. So they make it very hard to build manufactured housing communities. So limited supply, rising demand curve are all very attractive. and there were some other things I think that really caught my eye. I'm trying to recall all of the points, but
Well, I just think it's cool. I was wondering if you were going to tie the two together, but Park Please, right? Like the Airbnb of parking spaces,
yeah.
did that have some influence from, from the parking space? Cause I know like Kevin Bupp, he's buying, parking lots now, and it kind of has some overlap to the business model in mobile home parks.
It didn't, but the only overlap that was there for me was I'm always looking for chaotic industries, right? I'm looking for things that are a mess, because that's where that's where the value is to be created. And that's how you make money, right? Is by creating value, by solving problems. And so parking, when I got into that, and it still is, I mean, it's still a very fragmented, industry that needs a lot of solutions. And there's some really cool people out there, working on solving those things. But for me, it was like mobile home parks were like another chaotic, fragmented, misunderstood category. And I was like, this is it, right? I mean, because it's mom and pop owned, the data around the rents are just, nearly non-existent. The professionalism in this industry doesn't exist really yet. I mean, it is now, right? And there's guys like you and many others who are bringing that to the table. But it wasn't so much in 2016, 15, really, when I was looking into the space. And even today, it largely lacks, but I think that, we're getting there. So the idea of like a chaotic industry is maybe the overlap.
And before we started recording, I think we were talking a little bit about this. It's amazing to me, the new blood that's coming into the mobile home park space, right? It's, from the Bay Area, tech background to, mobile home parks, with the stigma, you wouldn't think, but the more and more operators that I interview and that I meet, they're very intelligent, and a lot have finance backgrounds or, some other sort of more white collar background. And they all see the benefits to mobile home park investing, because it is moated, there's no doubt about it, which is pretty awesome. But would you mind, I'm just curious, the other business that you had, was it like in hospitality or something, the one that kind of took a dive during COVID?
Yeah, great question. So no, that was a festival. So similar,
Oh,
right?
wow.
Yeah, it was a big monthly festival in the Bay Area that people loved, and it was a big event. And we're excited to bring that back, and we are bringing that back to the Bay Area. But yeah, not a good year for the event industry. So
yeah, that had to be
and I think, to go back to your point too, a little bit about the young blood coming into the space, or even just maybe more professionalism coming into the space. I think everyone's going to win in that ultimately, because what I'm seeing, and let me know from your standpoint, but I'm seeing a lot of people coming in and buying mobile home parks and improving them, right? I mean, it's not like, hey, these tenants are, sticky tenants, let's raise the rent and keep the park the same. No, I'm saying, hey, let's come in, let's run background checks, let's bring a level of professionalism to affordable housing that exists already in a lot of, large apartment style complexes. And let's make these safe, affordable, and a place, that people who live there can be proud to call a home. Let's take these from being trailer parks and turn them into manufactured housing communities.
Exactly.
And I think a lot of people, some foolishly look at people who are in the space as maybe taking advantage of poor people. And there's a really, really weird sort of notion out there I get sometimes, that if you're investing in affordable housing, it's like an evil thing. And I'm like, I don't understand that. I mean, so you're okay investing in the middle class, but you don't want to invest in, in the affordable housing. So I'm only seeing net positives come out of this thing. And I know for a fact, like, my litmus test in the community is like, I want to get it to a point where if I had to, I would have my family live there. Right. I mean, I want to make sure I'm building something I'm proud of, and it takes time, and it takes investment, but ultimately I'm super excited about the direction I see this industry heading into.
Yeah, 100% agree. And I think that's what's really cool, is these mom and pops that have, haven't really kept up with the maintenance, and that, there's a lot of tree trimming needed and road work needed. And, we're all aligned. I had a meeting we're doing some due diligence in a park in Michigan, and we met with the city zoning official at the park. And he had this really just bad taste in his mouth because the owner that we were buying the property from really just hasn't done anything for the last like 15 years. And, they had created new restrictions on the age of the homes that could be brought into the community. And, I think that there is some good behind that, these kind of new trying to clean up these communities. But, what I explained to the gentleman in zoning is I said, our interests are aligned. The better this community looks, the better financing I'm going to be able to get on this community. And, the better cash flow I'm going to be able to create for ourselves and for the investors. So
Yeah.
when I had that conversation, we started to be on the same team, and I was pointing out things that, we plan to do. And it turned the conversation around, which I agree with you. It's just being able to improve these assets is a win-win, for the residents, they're getting a better place to live. And, for investors, we're able to get really good returns, which is awesome.
Yeah.
Let's dive into that side of things, from a investor standpoint. Maybe you could tell us, what do you think are the most important things that passive investors need to know or look out for before they invest into mobile home parks?
Yeah, it's a good question. So, and it's one I think about a lot because I also am looking forward to the day when I'm on that side of the table. I mean, it's tough for me because I think like you, I mean, we enjoy being active operators, but I know one day I'm going to have to, be on the other side of the table so I can, enjoy my life, as well. But I mean, I think for a passive investor, I think the number one thing that I would recommend is first learn the space. Invest your time learning the asset and the space, just as much as if you were going to run it actively yourself. And then I think number two, because I think if you have that, that's a good qualifier. You can have better conversations with the sponsor or whatever group you're going to invest with. And you'll be able to sort of, have, not just a more quality conversation, but you'll also be able to sort of, sniff them out and sort of see if they know what they're talking about or if they're just, full of hot air. So I would recommend that. Second thing is get to know who you're investing with, who you're backing. Is this, someone that is, you'd be in the trenches with, someone that's not going to leave or desert something if times get hard. Because times get hard, things don't always go right. You might buy a property or a community and you think it has a good tenant base. And then you get in there and you find out, 3-4 months later that it's not what you thought it was. But, hey, as long as you've done the due diligence and the bones are good, you could work with that. But it's not easy, right? I mean, turnarounds, or just sort of surprises after acquisitions aren't easy. And there's always curveballs. That's a guaranteed thing. So you want to make sure that the person who is, you're backing, is someone who, is not likely to ever give up. Other things is just, I think there is sort of a trust factor. You want to, maybe check the references if you don't know the person, personally. And, I mean, it's always a question to ask too, is what are you investing in this deal? Is this person investing, their money? Are they putting their money where their mouth is? And maybe, maybe their recourse for the loan, and that's okay too. I mean, okay, well, what's your asset sheet? I mean, what's recourse? Is it your house? I mean, let's find out a little bit. And then their general background, maybe in business or in the asset class in particular, some use cases. I think, that's all probably a good starting point.
Yeah. And I bet a lot of that overlaps into what you do with your angel investing ventures, right? Would you agree?
Yeah, absolutely. I have certainly made some investments where I'm like, well, I'm not so sure about, I believe in the space, that they're in, needs some solutions. I don't know if this is the right solution for it. But if I really like the person, I'm like, okay, I'm going to bet on you, and, you're going to figure it out. And then even if you don't, if you pivot, into something else, I know that this is a person I want to sort of be backing on the next one too. So absolutely. It's all about, I hate to say the old thing, but it's, like the jockey is more important than the horse, right? You want to back the jockey.
Totally. Totally. I think that's great advice. And a lot of other people we've interviewed have said the same thing. Charlie, who was your first investor into one of your mobile home park deals?
My first investor would be, it was a deal between, I had my parents and two friends. They were my first investors. Yeah. So this was after I sort of had used my own capital, which I wanted to test out first, my thesis into this space. And then I brought in my parents and two friends. And then I since have opened it up to, professional contacts, friends, and even just some people who I've never met, which is kind of fun too.
Yeah, definitely. What would you say has been the toughest hurdle for you in the business thus far?
Scaling, right? Which I feel like, knock on wood, I have a good handle on right now. And you and I were talking before air. I mean, we're always still learning. I think that there's a lot of great models. And if you go through sort of, I think everyone goes to the Frank and Dave boot camp, and I recommend anyone who wants to get in the space, should invest the time and the money to go through that. I think it's a great starting point. And it gives you the model for one park, maybe two parks. But I think if you want to get to a level of, scale, and you really want to have, a portfolio of parks, and you want to, do this full time, that model doesn't apply anymore. And so that's why I realized that I was going crazy. I was trying to do the sort of, standard, have a manager that handles like 5 or 10 different things at one park. And then I'm going to manage the manager. And then I had 10 managers, and I was asking too much from each one of them. And then one would quit, and then I have to go reinvest time to onboard a new manager. So I've learned, to treat this much more like I would treat any other business, and to sort of have, divisions of specialty and divisions of labor, and to get, people who are full-time and focused on certain things within the business. And so scaling, I think, what has been my biggest challenge. But I feel I'm in a good spot right now, and I'm really happy with the team that I have.
That's awesome. Yeah. And I know right around, you said 600 lots, right?
Yeah.
That's a tough place to be. You get over that stage, like you said, where you got, a couple parks, 2 or 3 parks. And at this level, you're big enough now to make a couple corporate level hires. And as you get bigger, it definitely gets easier, where you're able to afford, off of your management fees, you're able to afford to hire good talent. But in the early stages, I was foregoing cash flow to be able to pay for the team, to be able to keep building. And that's the thing that, they don't really tell you at the Frank and Dave boot camp, but I agree with you. For 1 or 2 parks, it's a great baseline of the industry, and there's lots to learn. But as Jefferson Lilly says, in Mobile Home Park 2.0, the scalability level, it's difficult, because you're trying to put the puzzle pieces together. So
yeah, 100%. That's right. And I think what 2.0 looks like for one organization isn't necessarily what 2.0 should look like for another organization. I think, it's really important to talk to other folks who are leaders in the space, like yourself, Jefferson, Ryan Smith, I think Daniel Weisfeld over at, in the West Coast, doing some great things, and there's more. And so talking to folks who I think have scaled already, learning, hey, what's your model? How have you figured this out? But not necessarily mimicking that, because you got to also sort of say, okay, well, what are my goals? What do I feel like I need in the business? And I think, learn, but also, don't just follow, right? I think that's important too.
Oh, I totally agree. Charlie, what does the perfect mobile home park look like in your eyes? And maybe this aligns with your purchase criteria at RockStack Capital. Maybe you can kind of just elaborate on that.
Well, I don't know if it aligns with my criteria, because the perfect park is hard to find. So I don't know. The perfect park in my eyes, I would love, and this might be a little contrarian to a lot of people, I would love, a big old park, right? I mean, that part's not contrarian, but I would love it to be 100% occupied with like all brand new, like, recent 10-year, model homes and I'd like it to be 100% park owned homes.
Oh my goodness. All right. We're going to have to stop right there. You're going to have to elaborate on this for me.
Well, yeah, I mean, I know it's not popular. And look, I will still put them on rent to own contracts. I don't really want to rent them. But boy, I love that extra cash flow. I mean, it's just, it pays for a lot. And I love that it's not capped. You're not paying a cap on the extra cash flow. And I think that's one of the like golden goose elements of this space is that, we're only capping the lot rent. And, I mean, sometimes the home payment is, 80% of what the lot rent is on average. And it's like, that's extra cash flow. That's real money that you're not paying a multiple on. So, I mean, the downside is that, yeah, if it's a bunch of older homes, I mean, and then you get turnover and you got to refix them and rehab them. I mean, there is cost to that. So it's kind of, to me, it's like, I'd almost rather have a community that's 100% tenant owned or it's like 80% park owned home, because it's kind of like harder, I think, to maintain something that's a little bit in the middle, because you got to like have like a handyman and stuff like that.
Yeah.
But no, I love park owned home income.
That's great. Very interesting. I know that Dylan Marma and Charles Dehart, they have a very similar model right now where they are buying big communities that are park-owned home and then, slowly converting them over a 5-year time horizon.
Yeah.
And I think that's a brilliant method, and I know I spoke with Sam Hales and he said the same thing, that, it's the homes are there, right? Like that's one of the hardest parts, is to get the homes, bring them in, do the piers and everything. But these homes are there. You just have to convert them, over a time horizon. And from my experience, it's difficult. I mean, you gotta play that balance of, do you have a maintenance guy? Do you not? And there's just other expenses, right? Like, while you're going through that whole process and rehabbing homes and stuff. But there's more than one way to skin a cat. There's a lot of ways to make money, and that's one of them. That's an interesting model. I know there's a fund out there right now buying mobile home parks just with private utilities. And it's getting creative because the market's getting more competitive. So yeah, I think it's interesting for sure. What hurdles do you think the MH industry will face moving forward?
Regulation, I think, and this is, I think, something I'm afraid of, is probably rent control regulation. Yeah, I think that, and this kind of goes back to sort of what we were talking about, where, we are coming in and we are improving the communities and we're investing in the communities. But the thing is that Ma and Pa, who, for all intents and purposes, I know everyone loves Ma and Pa. It's like a romantic, sort of idea around this, but, more times than not, they were unintentional slumlords. I mean, they didn't maybe mean to be, but they figured, hey, I'm not going to raise the rent, but I also don't want to fix anything. And then the tenants, sort of were like, well, lot rent's only $180. I mean, maybe if I just don't bother them, I mean, they're not going to raise the rent, right? So I think that happened for like decades. Yeah. But then you have these things that are like dilapidated, they're falling in the ground, they're practically melting sometimes, and it's like, it's either reinvest in it, make a mobile home park, be a good landlord, fix things, but like rent's not going to be $180. That's not going, otherwise it's going to be torn down and we're going to build condos here. So when we have to come in and raise that $180 rent to $400, which is where it needs to be to support not just the sort of market use for the land, but also sort of debt service with the bank, operating costs. That's the right thing to do. The problem is that I think that politicians on the Hill, hear that and they think evil people are taking advantage of tenants and jacking up the rate, 25%, 40%, 30%. And to an average day person who's paying like maybe $1,000 a month for their rental or something, they're thinking, wow, that sounds greedy. But when you realize you're talking about $30 a month, I mean, it's not. It's the right thing to do. And so I think I'm afraid of the headlines and afraid of the regulation that will come, because I think it's only going to hurt the progress of affordable housing. Because I mean, what's the other option? I mean, Class C apartments and Section 8 vouchers, they're not great places to live most time. The tenant, does not have any pride of ownership. They're not going to own their home. There's no long-term security for them, and it's also largely subsidized by taxpayers. So I think that's what I'm afraid of is us as an industry not getting ahead of the narrative and letting sort of this clickbait headlines dictate policy.
Yeah, valid concerns for sure. Charlie, what's the value proposition at RockStack Capital, and what makes you guys different? What are your property types that you're looking to acquire? What's your goals for the long term? Tell us about your business, if you don't mind.
Yeah, sure. So RockStack Capital is not like a very big group. I mean, it's pretty much me. It's my capital that I've been sort of building up over the years, and then I invite people to invest along with me in deals. But I'm typically generally the largest investor in my deals, and so it's really just sort of this group I've created for myself to grow my own wealth. And my own, sort of, streams of cash flow. And then I invite, friends and family and colleagues, to join along, should they want to, and should they be, meet accredited criteria. I have two sort of funds right now that I kind of view it as, one's legacy, long-term buy and hold. And then one is, sort of value add, come in, do the right things, and flip. And so that's sort of my my thesis right now on that.
Very cool. Do you have a minimum number of lots, or public private utilities, MSA type of target?
Yeah. I always start with the MSA. I want really strong demand. I don't think my criteria is too far from most. I want to be in a place of a diverse economy. I want to have be very close to a major metro of at least 100,000 people and up. Hopefully it's much higher than that. I've only dealt with public utilities so far. I'm not opposed to private utilities. I just haven't done that yet. And I found enough deal flow still in the public utility realm that I haven't felt the need to jump in. And I don't have like a very I'm not out raising a fund, and so I don't have the same pressure as some people might, where they have to kind of really, be quick to close on deals. So I can take my time a little bit more, and then other than that, I just like lot sizes. If it's not near 30 minutes of a community I already own, then it's probably got to be at least 50 pads. But if it's near a community I already own, then I can do less. Or sometimes if it's a like the value is just so great that we want to sort of come in, and it's so under market. Maybe it's a 15 pad park, but we realize we can come in and do the right things, and then in a year we can sell it for double or triple the price. I mean, I'm not going to pass that up either. So there's like the opportunistic side, and then there's sort of the long term legacy buy hold side.
Totally, yeah. Daniel Weisfield was telling me about like a 15 lot park that they bought right in Seattle, right in the downtown area, and had to do very little, but the appreciation there just skyrocketed. So I think a lot of operators they have this lot number goal in mind, and I agreed with it to an extent, because it's harder to manage the smaller assets and pay a manager enough. But yeah, there's definitely opportunities out there. For sure.
And I think that the big opportunity right now truly is anything under 50 pads. I mean, you're going to be competing against institutional or large professional portfolios for anything over 50 pads at this point. It used to be over 100, right? And I think now it's over 50. And so I still think that, if you're playing within, call it the 20 to 50 pad range, that's kind of the next leg where I think there's so much value to be had. And I do think you're going to eventually see the guys, now they're buying the 50 pad plus, they're going to move down eventually into the 30, 25, 50s. So I think that there's a lot of opportunity left there too.
Wow. Yeah. I mean, if you can manage them, I think I think you're right. There's a lot of value to be had there for sure. So I think you're one of the first operators that have said that. So, very cool that you're different in that aspect.
I mean, I may be wrong, but so don't listen to me. That's just what I think.
No, I think you may be onto there. And if you can cluster them together, all the better.
Yeah, that's the thing is, if you can cluster them together. I have 3 parks like that. I have one that was a 25 pad park. And then I added on one that was like a mixed use property, a warehouse, apartments, and 10 pads. I mean, we're talking two minutes away. And then I added on another one that was 35 pads and some self-storage. And now altogether I have like 75 units and they're all 2 minutes apart.
Oh,
so,
wow. Yeah.
I mean, what's the difference between that and like one big park? I mean, it's almost the same to me. Like I can run it the same.
Yeah. You probably could get one manager to handle all 3, which, you get scale, which is great. Well, Charlie, thank you so much for coming on the show. I mean, it was a pleasure having you. Thank you so much, man. I really appreciate it.
Andrew, pleasure's mine. I look forward to, hopefully seeing you in person one of these days. I'd love to have a cup of coffee with you and hang out. But this was a nice start.
Definitely. How can our listeners get a hold of you if they'd like to do so?
Sure. So I make myself available as much as possible. They can email me. It's simply Charlie. That's with an IE. Charlie at RockStackCapital.com. If you have a deal you want to review, if you want my opinion or insight, I'm happy to help where I can.
Awesome, man. Well, thank you so much. That's it for today, folks. Thank you all so much for tuning in.
Hey, are you getting value out of this show? If so, would you mind please going over to iTunes and leaving the show a quick 5-star review? I have a goal of hitting over 100 5-star reviews by the end of 2021, and it would mean the absolute world to me if you could help contribute to that. Thanks ahead of time for making my day with your 5-star review of the show.